Hi, Amelia Koiken here, buyer's agent at Melia Property. I help busy professionals, women facing change, and regional Australians invest in property with confidence. I offer independent, strategic, and personalised advocacy for you, the buyer. That's built on trust and care, not commission. You deserve more than a cookie-cutter deal and a hard sell when you're making one of the biggest financial moves of your life. You deserve someone who sees you, hears you, and genuinely has your back throughout the property journey. Let's get into today's video. How to get purchase ready. Getting ready to purchase a property is a lot like flying a plane. Pilots have a strict takeoff procedure that gets followed to the T each and every time. Following that procedure ensures, probably most importantly, everybody's safety, but also that you start the journey in a way that's going to get you to your planned destination comfortably and minimizing risk and stress. You need to approach preparing yourself to buy an investment property like a pilot would their takeoff procedure. Crossing your T's and dotting your I's can be overwhelming, confusing, and let's face it, not that fun. But by doing the proper groundwork, it means that when the perfect property shows up, you're feeling confident, prepared, and you're ready to make a move. So let's look at the 5 key steps that you're going to need to take to get purchase ready. Step number 1. First of all is to get your financials in order. Think of this as your property investment foundation. You'll want your latest and any outstanding tax returns completed. So you'll definitely need to chat with your accountant and see what needs to be done to get you up to date. Why? Because you'll need to have this information ready to go when you apply for finance. Without it, your finance applications are going to get really messy. There are going to be delays while you get all the information organised, and you're going to make your broker's life a whole lot easier. Next step is to surround yourself with the right advisors. This is going to be your A team. This is the team of professionals who are going to help you put together a plan of attack, both short and long term. They are going to take into account your situation right now and where you want to be in the future. Professionals you need to get advice from include your accountant. Now, I've already spoken about getting your financials in order in step 1, and I would highly recommend talking to your accountant even 6 to 12 months before you plan to purchase. The way that they present your financials is going to determine your borrowing capacity. So letting them know that this is what you plan to do in advance is going to help them to get your financials looking the best that they can. They'll also be able to give you advice on the best purchasing structure for tax purposes, and I'll talk more about this later. A financial planner. This person is going to help you with tax planning, debt reduction, making a plan for retirement, and even succession planning. They'll help you find ways to make sure that your money is working smart for you throughout the ups and downs of life. A solicitor. They'll be able to give you advice on the best purchasing structure for asset protection, succession planning, and can also give you a little bit of feedback on the purchasing structure advice you got from your accountant. Now, your solicitor won't always agree with them, so I'll talk more about that later. Step number 3 is to decide on a purchasing structure and get it set up. Are you going to buy this investment property in your own name? Is it going to be in a company, in a trust, a self-managed super fund? There are heaps of options out there. I know this sounds super technical, but the decision you make here is going to have a massive impact on the tax that you need to pay in the future, your asset protection, your short and long-term borrowing capacity, the ease of equity extraction, and also your exit strategy. Getting advice from your A-team professionals is going to help you find the best structure for you. And as I said before, Your professionals may not always agree on what is the best structure. You have to keep in mind that your accountant will be looking at this from a tax point of view, and your solicitor is going to be looking at this from a legal and asset protection point of view. So those two may not always match, but you need to pick the structure that you feel the most comfortable with, because one of those options is going to be more important for you. So once you've decided, get the structure set up. Keep in mind that it is going to take anywhere from 1 week to a few months to get this done. So get it done nice and early. The main thing is that you don't wait until you've found the right property for you to get this organized. You need to be ready to go with your purchasing structure before you even start looking. If you do it the wrong way around, this is a quick moving market and you will miss out. There is no time for delays. Right, step 4. This is where your mortgage broker comes in. Find a mortgage broker who knows their stuff and is also someone that you connect with. You're going to be sharing really personal information with them, so you want to be able to get along. Find out from them what your borrowing capacity is. If the amount that your broker comes back with fits in with your strategy, get a pre-approval done there and then. If your borrowing capacity isn't quite what you want it to be, a good broker is going to be able to tell you what needs to change in order to get you where you want it to be. Mortgage brokers have access to so many more lenders than if you were to go about this on your own or simply go direct to the big banks. Each lender is going to have its own way of assessing your borrowing capacity and may offer you some alternative opportunities that you didn't know that you had, some opportunities to get you into the market rather than waiting. Getting pre-approval is an absolute must in this competitive market. I mean, it ensures that you're looking, number one, in the right price bracket, but it also makes your offers that much more appealing to sellers. And it speeds up the process of getting that final approval, which can give you a real competitive edge against other buyers. Step number 5. Now that you've talked with your advisors and you know your budget, get clear on the exact property that you're after. Decide on a detailed purchase brief based on the strategy that you're going to follow. Some details that you need to know are: what's your budget? Are you after a certain percentage return in capital gain and rental income? And over what time frame do you expect these returns? Based on that information, then you need to look at the style and the location of the property that you're after. What size land will it have, if any? The number of bedrooms, bathrooms, living area that you're going to want. And renovations. Are you willing to do them? Can you afford to do them? By getting your must-haves and absolutely not clear and written down, you'll be able to narrow in your search. You can shortlist properties with that laser precision, so you're not wasting time looking at anything that's not going to serve your goals and it's not going to serve your strategy. You'll also eliminate some of that emotional aspect of buying and maximize your chances of finding a property that ticks your boxes and finding that property quickly. So that's the 5 steps of my pre-flight, pre-purchase procedure to get you off the ground with confidence and clarity. Number 1, get your financials sorted. Number 2, get advice from your A-team professionals. Number 3, decide on and set up your purchasing structure. Number 4, speak to your mortgage broker. And number 5, define your purchase brief. So I hope you found this super helpful. Don't be afraid to reach out if you have any questions or just want to chat. My links are in the description below. I'm Amelia Koiken at Melia Property. I give independent, honest buyer's advocacy for people who want to invest smart without being sold to, pressured, or ripped off. I'm the buyer's agent who gives a damn about you.